What if I told you that trying to double your money with NVIDIA right now might be the wrong strategy, even though it's one of the hottest tech stocks on the planet? I know that sounds crazy, but stick with me for the next few minutes because I'm about to reveal 6 hidden opportunities that could actually have a better shot at doubling your investment than NVIDIA itself. And trust me, the last 2 stocks on this list are absolute game changers that most investors completely overlook. But before we dive into these incredible opportunities, do me a quick favor. Smash that subscribe button and hit the bell icon so you never miss our market insights. Seriously, it takes 2 seconds, and it helps this channel bring you more content like this. All right, let's get into it. Here's the thing about NVIDIA that nobody wants to admit. Yes, it's an amazing company. Yes, they're dominating the AI chip market. But here's the brutal truth. NVIDIA is now worth $4.6 trillion. Let me put that in perspective for you. For NVIDIA to double from here, it would need to add another $4.6 trillion to its market cap. That's literally like creating an entire Apple or Microsoft from thin air and still having money left over. It's an astronomical number that honestly defies logic when you think about it. This is what we call the law of large numbers in action. It's basic math, really. A $10 million company becoming a $20 million company? That's challenging, but very doable. A $4.6 trillion company becoming a $9 trillion company? That's a whole different ballgame. Even when NVIDIA announces groundbreaking new chips like their latest Rubin processor, the stock barely moves anymore because the market has already priced in so much growth. The company has simply gotten too massive for those explosive percentage gains we saw in previous years. But here's where it gets interesting, and this is why you need to keep watching. There's an investment strategy called drafting the Titan, and it's absolutely brilliant. Think about it this way. When you buy an NVIDIA Rubin chip, you're not getting a complete system. You're getting a chip, just the chip. Now, what does that chip need to actually function in a data center? It needs specialized power systems. It needs cutting-edge networking infrastructure. It needs advanced cooling solutions. It needs sophisticated packaging. Every single time NVIDIA sells one of their chips, all of these supporting technologies have to be sold alongside it. And the companies making these components, they're much smaller. They have way more room to grow. And they're about to ride the exact same wave that NVIDIA is riding. So let me break down these 6 opportunities for you. And I'm telling you, by the end of this video, you're going to have a completely different perspective on how to play the AI boom. And don't you dare skip ahead to those last 2 stocks because I'm going to build this case step by step, and everything connects. Also, if you're finding value in this breakdown, drop a comment below and let me know which stock interests you most. The algorithm loves engagement, and it helps us reach more investors like you. Let's start with stock number 1. This is a company called Flex Limited. You might know them by their old name, Flextronics. Now here's what makes Flex absolutely critical to the AI infrastructure build-out. They manufacture something called power shelves, and these aren't your regular power supplies. When you're running AI workloads on NVIDIA chips, the power quality has to be absolutely pristine. We're talking ultra clean, precisely regulated electricity. You cannot just pull power straight from the electrical grid and pump it into these chips. The voltage fluctuations, the inconsistencies, the noise in standard electrical power would destroy these sensitive processors, or at minimum severely degrade their performance. This is where Flex comes in. They create specialized power conditioning systems that sit inside every AI server rack. Every single NVIDIA chip installation requires a Flex power system to operate properly. There's no way around it. It's not optional. So think about what this means. NVIDIA sells a chip, and automatically there's demand for Flex power infrastructure. It's a direct one-to-one relationship. Now, if you look at the chart for Flex, you'll notice it's already rallied quite a bit. It's trading around $67, which is near its 52-week high. Some people might see that and think they've missed the opportunity. But here's the reality. Flex, like most semiconductor-related stocks, got hammered during the recent chip sector downturn. They're just now recovering to levels they've previously achieved, which means there's still substantial room for growth, especially with major catalysts on the horizon. The beautiful part about Flex's business model is the moat it creates. Once a data center installs Flex power systems for their NVIDIA infrastructure, they're locked in. Every expansion, every upgrade, every new rack they add requires more Flex equipment. The moat gets wider with every installation. So when NVIDIA reports growing earnings and guides higher for future quarters, you can make a pretty safe assumption that Flex's guidance is going to follow a very similar trajectory. They're essentially handcuffed together in the best possible way. Moving on to stock number 2, and this one is fascinating. The company is called Coherent, and their ticker symbol is COHR. Coherent operates in the photonics space, and if you're not familiar with photonics, let me explain why this technology is absolutely crucial. Back in the day when you connected computers together, you used Ethernet cables, those Cat5 cables that probably still run through your house. But modern data centers don't work that way anymore, especially not for AI applications. Everything is fiber optics now. Everything is photonics. We're talking about connecting server racks to each other, connecting individual processors within the same system, all of it running on fiber optic cables transmitting data via light pulses. Why does this matter? Speed equals money in the AI world. The faster data can move between processors, the faster those processors can crunch through AI workloads. If you've just invested millions of dollars in NVIDIA's latest Rubin chip, which can process information at incredible speeds, it makes zero sense to bottleneck that performance with slow networking. It's like buying a Porsche that can theoretically hit 200 miles per hour and then only driving it in a parking lot. What's the point? So every company upgrading to NVIDIA's new chip generation is simultaneously upgrading their networking infrastructure to coherent as photonic systems. They have to, otherwise they're wasting their investment. But coherent has an even bigger advantage that most people don't know about. The fastest way to transmit data using photonics involves something called an indium phosphide laser. And coherent basically controls the entire indium phosphide supply chain. They've got a near monopoly on this critical material, so whether you're building your own photonic systems and need the raw indium phosphide, or whether you're buying pre-packaged laser systems, you're going through coherent. There's really no way around them. This creates incredible pricing power and ensures they capture value from the entire AI infrastructure build-out. Now, coherent has already had a monster run. The stock is up about 78% in just the last 3 months. It's trading near all-time highs. Some investors might look at that and think the opportunity has passed, but consider this. Management is guiding for approximately 17% sequential quarter-over-quarter growth. That's not annual growth, that's every single quarter. If they maintain that trajectory, and if NVIDIA's Rubin chips sell as well as expected, Coherent's revenue is going to explode. Once the stock breaks through that $200 psychological barrier, I think we could see momentum really accelerate. Sure, Coherent is already a $31 billion company, so doubling might take a couple of years rather than a few months. But compare that timeline to NVIDIA. Which do you think doubles faster? A $31 billion company with 17% quarterly growth, or a $4.6 trillion company? All right, let's talk about stock number 3. This is Amkor Technology, ticker symbol AMKR. Here's the situation with Amkor. NVIDIA designs and manufactures the chips, right? But somebody still has to take that chip and mount it onto a circuit board. Somebody has to stack the memory modules. Somebody has to do what's called advanced packaging. This is highly specialized work. There are only a handful of companies in the entire world that can do it at the scale and precision required for cutting-edge AI chips. The main players are TSMC, Intel, and Amkor. Now, TSMC is currently overwhelmed with demand. They're running at capacity. Intel is still struggling to get their advanced packaging capabilities fully operational. They're working on it, but they're not there yet. This makes Amkor the pressure release valve for the entire industry right now. And here's the kicker. Amkor is the only major advanced packaging company based in the United States. They're operating out of Arizona, which, if you've been paying attention, is where seemingly every chip company is building new fabrication facilities these days. There's a massive push to bring semiconductor manufacturing back to American soil for national security reasons. And Amkor is perfectly positioned to benefit from this trend. If you look at Amkor's stock chart, you'll see it's near its 52-week high, but it's also experienced some recent volatility. There's been some institutional money rotating out of the semiconductor sector. But here's what's interesting. Retail investors are gobbling up every share the institutions are selling. As fast as the big money exits, individual investors are stepping in. This tells me that smart retail traders recognize the opportunity here. They understand that the semiconductor slump is ending, and Amkor is going to be a major beneficiary of the next growth cycle. Stock number 4 is Navitas Semiconductor, ticker NVTS. This company is working with gallium nitride technology, and this is where things get really interesting from a physics standpoint. Gallium nitride is fundamentally superior to silicon for power management. It processes electrons about 1,000 times more efficiently, and it handles heat distribution dramatically better. Every high-speed charging system uses gallium nitride. Any application where chips get extremely hot, extremely fast, gallium nitride beats silicon by the laws of physics. There's no debate about it. Now, think about AI workloads. The 3 critical constraints for AI are processing speed, electrical efficiency, and cooling. Those are the 3 things that determine how much AI computing you can pack into a given space. Silicon chips are approaching their physical limits on all 3 of those dimensions. When you max out what silicon can do, you have to move to the next material. And that next material is gallium nitride. Navitas is the leader in this space. They've got the expertise, they've got the manufacturing capability, they've got the patents, Navitas has had an absolutely wild ride this year. At one point, the stock had increased more than 10 times from its lows, hitting $17 before pulling back. That kind of volatility might scare some investors, but I see it differently. It shows that the market recognizes the potential here. The question is, where does the true value settle? I think the answer lies in understanding that as AI processing demands increase, heat management becomes non-negotiable. Navitas' ability to manipulate gallium nitride and create superior power management systems gives them a durable competitive advantage. This isn't optional technology. It's going to be required technology as we push the boundaries of AI performance. Now, before I reveal the final two stocks, I need you to do something. If you haven't already subscribed to Stock Aura, do it right now. Click that button, hit the notification bell, and here's why. The market is moving incredibly fast right now. The AI infrastructure build-out is happening in real time. Missing even one of our videos could mean missing an opportunity that could significantly impact your portfolio. Also, share this video with anyone you know who's interested in tech investing. The more people we can educate about these opportunities, the better. And drop a comment telling me which of these stocks you find most compelling. I read every single comment, and your feedback helps me create better content for you. All right, stocks 5 and 6. These are the surprise picks, and they're absolute game changers. These two companies form what's called a duopoly. They're the only two companies that do what they do, and what they do is absolutely essential to the entire semiconductor industry. These companies create the design software that every chip company uses to design their chips. Before NVIDIA can send their chip designs to fabrication facilities to be etched onto silicon or gallium, they have to use software to create those designs, and there are only two companies that make that software at the level of sophistication required for cutting-edge AI chips. Both of these companies are currently working directly with NVIDIA. One of them just received a $2 billion investment from NVIDIA. Let that sink in for a moment. NVIDIA, a company worth $4.6 trillion, felt it was strategic enough to invest $2 billion into this company. The other company has about 20% upside according to analyst consensus targets. But here's what's really interesting. For both of these stocks, analysts keep chasing the price targets higher. The stocks keep trading above analyst estimates, and then the analysts revise their targets upward. This creates a kind of positive feedback loop, where the market is consistently validating that these companies know what they're doing and are executing better than expected. Stock number 5 is Synopsys, ticker symbol SNPS. Stock number 6 is Cadence Design Systems, ticker CDNS. These two companies own the chip design software market. If you're designing advanced semiconductors, you're using Synopsys or Cadence. There's really no alternative. This gives them incredible pricing power and ensures they capture value from every new chip generation. As chips get more complex, the software required to design them gets more valuable. As AI chips push the boundaries of what's possible, Synopsys and Cadence become even more essential. Think about the position these companies are in. NVIDIA needs them. AMD needs them. Intel needs them. Every chip company needs them. And as the AI boom drives demand for more advanced chips, it simultaneously drives demand for more sophisticated design software. These companies are picks and shovels plays on the entire semiconductor industry, but with a twist. They're not commodity picks and shovels. They're highly specialized, difficult to replicate tools that only two companies can provide. That's about as close to a guaranteed winner as you can find in the stock market. The beauty of this approach to investing in the AI boom is that you're not betting on a single chip company. You're not hoping that NVIDIA maintains its dominance or that some competitor does not come along and disrupt the market. You're investing in the infrastructure that supports the entire ecosystem. No matter who wins the AI chip wars, Flex still needs to provide power systems, Coherent still needs to provide photonics, Amkor still needs to package the chips, Navitas still needs to provide gallium nitride power management, and Synopsys and Cadence still need to provide the design software. These companies win regardless of which chipmaker comes out on top. So let me bring this all together for you. NVIDIA is an incredible company, and they're going to continue growing. But the law of large numbers means that explosive percentage gains are unlikely from here. A $4.6 trillion company just can't double as easily as a smaller company can. But the companies that support NVIDIA's ecosystem, they're much smaller. They have way more room to run. And they're directly tied to NVIDIA's success without being subject to the same valuation constraints. If you're looking to potentially double your money over the next year or two, these 6 stocks deserve serious consideration. Flex for power infrastructure, Coherent for photonics, Amkor for advanced packaging, Navitas for gallium nitride technology, and the duopoly of Synopsys and Cadence for chip design software. Each one plays a critical role in making AI infrastructure work, and each one stands to benefit enormously from the continued build-out of AI data centers. Now, I want to hear from you. Which of these 6 stocks are you most interested in? Are you thinking about adding any of them to your portfolio? Have you done your own research on these companies? Drop your thoughts in the comments below. Let's get a discussion going. And if you found this video valuable, hit that like button, share it with your investing friends, and make sure you're subscribed to Stock Aura so you do not miss our next deep dive into market opportunities. The AI revolution is just getting started, and the companies supporting this revolution might just be the best investment opportunities of the decade. I'll see you in the next video.